studying your last two. I swim med when they turned in. The staring down to mute. And can learn the pole that sunk he died.
When most corporate owner-managers think about CPP contributions, they usually focus on one thing: the retirement pension they will receive many years in the future. As a result, many business owners see CPP simply as another payroll cost and often try to minimize those contributions by paying themselves dividends instead of salary. But that perspective overlooks one of the most valuable features of the Canada Pension Plan. CPP is not just a retirement plan. It is also an insurance program. Let's begin with the left side of the slide. As a corporate owner-manager, every compensation decision starts with a choice. If you receive salary, both you and your corporation make CPP contributions. If you receive dividends instead, no CPP contributions are required. Many owners naturally ask the question shown in the thought bubble: I'm paying CPP. What am I actually getting? The answer is much broader than most people realize. On the right side of the slide, you can see the four major benefits provided by CPP. The first is the retirement pension, which most people already know about. The second, and the focus of this section, is the CPP disability benefit. Third, CPP provides survivor benefits that may help support eligible family members after a contributor's death. And finally, there is the CPP death benefit, which provides a one-time payment under qualifying circumstances. Notice that the disability benefit is highlighted more prominently than the others. That's because many owner-managers completely overlook its value during compensation planning. Imagine a business owner in their 40s or 50s. They may be decades away from retirement and therefore place little value on a future CPP pension. However, becoming seriously ill or permanently disabled could happen unexpectedly at any stage of their working life. If that occurs, the ability to earn business income may disappear almost overnight. At that point, the CPP disability benefit can become far more valuable than the future retirement pension that most people focus on. This changes the way we should think about CPP contributions. Rather than viewing CPP simply as a retirement deduction or a payroll expense, it is more accurate to view it as purchasing access to a package of government benefits. Some of those benefits may never be needed, but just like any insurance policy, their value becomes apparent when an unexpected event occurs. This is why the banner at the bottom of the slide is so important. CPP is partly a retirement plan, but it also functions as an insurance program. Professional tax advisors understand this distinction. When deciding between salary and dividends, they don't evaluate CPP contributions solely based on retirement income. They also consider the insurance protection that those contributions provide throughout the owner's working years. In the next slide, we'll take a closer look at the CPP disability benefit itself and see why many tax professionals describe it as a built-in insurance policy that every contributing owner-manager already has. In the previous slide, we learned that CPP is much more than a retirement pension. One of its most valuable features is the disability benefit. Now let's see why this benefit can be so important for corporate owner-managers. At the top of the slide, we begin with a healthy business owner who actively manages a successful corporation. Everything is running smoothly, and the business provides the owner's primary source of income. But life doesn't always go according to plan. An unexpected accident or a serious illness can happen at any time. If the condition is severe enough to prevent the owner from working, the business may no longer generate the same level of income. For many owner-managed businesses, the owner's ability to work is directly connected to the company's success. Without that income, the family's financial situation can quickly become difficult. This is where the CPP disability benefit becomes important. As illustrated by the green shield, eligible CPP contributors who become severely and prolongedly disabled may qualify for monthly disability payments. These payments are designed to replace at least part of the income that has been lost because the individual can no longer work. While the benefit is not intended to replace an entire business income, it can provide an important source of financial support during an extremely challenging period. The comparison in the middle of the slide clearly demonstrates the difference. On the left side, without CPP disability coverage, the business slows down or even stops operating. Income disappears, and financial stress increases as bills continue to arrive while earnings decline. On the right side, the business may still experience difficulties, but eligible CPP disability benefits provide ongoing monthly income. This additional financial support can help cover essential living expenses and provide greater stability for the owner and their family while they deal with a serious medical condition. Notice that the slide refers to CPP disability as a built-in insurance policy. This comparison is useful because many business owners already understand the purpose of disability insurance. They purchase private policies to protect their income if they become unable to work. CPP offers a similar type of protection, although it operates differently. Unlike private disability insurance, CPP disability coverage is not purchased through a separate insurance company. Instead, it is funded through CPP contributions made over a person's working career. As shown in the comparison table, private disability insurance is optional and requires separate premium payments. Coverage terms vary depending on the policy, and insurers typically assess medical history, occupation, and other underwriting factors before issuing coverage. CPP disability works differently. If an individual has made sufficient CPP contributions and meets the program's eligibility requirements, disability coverage is already built into the Canada Pension Plan. There is no separate insurance application or monthly premium beyond the CPP contributions themselves. Of course, it's important to understand that qualifying for CPP disability benefits is not automatic. Applicants must satisfy specific legal and medical eligibility requirements established under the Canada Pension Plan. The benefit is intended for individuals whose disability is both severe and prolonged. The key message from this slide is that CPP contributions should not be viewed only as a cost deducted from a paycheck. They also purchase access to valuable disability protection that many owner-managers already have, but rarely consider. For some business owners, this built-in protection may become one of the most valuable financial benefits they ever receive. In the next slide, we'll examine how professional tax advisors decide when this disability protection should influence the choice between paying salary and paying dividends. We've now seen that CPP provides valuable disability protection in addition to retirement benefits. The final question is how this should influence compensation planning for a corporate owner-manager. The answer is illustrated by the decision framework at the top of the slide. The first question a tax advisor should ask is not, how can we avoid CPP contributions? Instead, the better question is, does this client need the disability protection that CPP provides? If the answer is yes, then paying salary and therefore contributing to CPP may be the more appropriate strategy. Salary creates CPP contributions, and those contributions help maintain eligibility for CPP disability benefits, provided the individual meets the program's contribution and eligibility requirements. On the other hand, if the client already has comprehensive disability insurance, substantial personal investments, and enough financial resources to comfortably support themselves if they become unable to work, then CPP disability protection may be less significant in the overall compensation decision. That doesn't automatically mean dividends are the better choice. It simply means that disability coverage becomes a smaller part of the overall analysis. Notice the two client profiles shown in the middle of the slide. Client A is a younger business owner with a growing family, a mortgage, and a business that depends heavily on their personal effort. If this owner becomes seriously disabled, both the family's income and the business itself could be affected. For someone in this situation, CPP disability protection may provide meaningful financial security. Continuing to make CPP contributions through salary could therefore be an important part of the compensation strategy. Now compare that with Client B. This individual is financially independent, has extensive private disability insurance, a large investment portfolio, and multiple sources of income. While CPP disability benefits would still have value, they would likely represent a much smaller portion of the client's overall financial protection. These two examples highlight an important principle. The same compensation strategy will not be appropriate for every client. Professional tax planning is always personalized. The advisor checklist at the bottom left shows the factors that should be reviewed before making a recommendation. How old is the client? Do they have a spouse or children who depend on their income? Do they already have private disability insurance? How much emergency savings or cash reserves do they have? What level of financial risk are they comfortable accepting? And finally, how does disability protection fit into their overall compensation strategy? Every one of these questions helps the advisor understand the client's unique circumstances before deciding between salary and dividends. The journey shown across the bottom of the slide summarizes the entire planning process. Choosing salary leads to CPP contributions. Those contributions provide access to disability protection. That protection helps support family financial security if an unexpected disability occurs. And ultimately, that contributes to the client's long-term financial plan. This section teaches an important lesson that many business owners overlook. CPP contributions should never be viewed only as a retirement expense or a payroll cost. They also purchase valuable insurance protection during a person's working years. For many younger owner-managers, especially those with families, mortgages, and businesses that rely heavily on their personal involvement, that protection may be worth far more than they initially realize. The key takeaway is simple. The decision between salary and dividends should never be based only on minimizing taxes. Professional tax advisors evaluate retirement planning, disability protection, family responsibilities, cash flow, investment goals, and overall financial security before making a recommendation. The best compensation strategy is the one that balances tax efficiency with the client's complete financial picture, ensuring they are protected not only in retirement, but also throughout their working life.